Well, the minutes from the Reserve Bank's recent meeting have been released, revealing that Australia's central bankers agree further reductions to the cash rate were more likely than not. Business reporter Chris Kohler is in Sydney and joins me live. Chris, what else did the minutes say?
Yeah, so the big takeaway here was, as you mentioned, the more likely than not. That is about as clear as a central bank really does get. And it sort of adds to this feeling that Philip Lowe is quite a forthright and transparent governor here. Now, the market has taken that to mean that basically there's no hurdle from the RBA. They're not arguing that there's going to be possibly multiple RBA rate cuts in the next few months. The market is pricing in 2 more 25 basis point rate cuts by the end of the year, with the months most likely to see that now August and either November or December. So that would, of course, take the official cash rate to a never-before-seen low of 75 basis points. Now, that is extremely low, but it's really worth pointing out at this point that there's really no guarantee that those cuts are going to be passed on in full to mortgage holders. Now, when we saw the first cut that we did in 33 months just 2 weeks ago, we, of course, saw that ANZ and Westpac opted not to pass on those full interest rate cuts. So now the question becomes, well, how much are mortgage holders going to see and how much impact are these cuts likely to have on the market?
So it looks like a further rate cut is pretty likely. What are the chances that it'll take place next month, or is it more likely later in the year?
It is more likely later in the year. We're currently pricing in about half, a 50-50 chance, I should say, for July. It does look like it's going to be August and then the end of the year. There are some economists out there that think we're going to get all the way down to 0.5% for the official cash rate, JP Morgan being one amongst them. Now, look, how's the market reacting to all this news? Well, the Australian dollar is the weakest of the major currencies today, heading towards a 10-year low on a closing basis. Last I checked, it was only just above 68 US cents. Now, just a reminder here that at the start of 2018, in January, the Aussie dollar was buying around 81 US cents, so a really long way that it's come down in that time, and it's not done falling, it would seem, still heading lower today. Over on the Australian share market, the story couldn't be any different. We're heading towards a new 12-year high on a closing basis. If we can keep on hanging on to these gains, we're up about 0.5% or 0.6% as I speak to you now, around 6,567 points.